Final week of the month and the quarter. We're getting Q1 to close here this week on Thursday. Had a pretty exciting last couple of weeks. Lost some stocks for some profit. Big movements in Forex on one particular currency. We'll talk about that in a little bit. Let's get into the risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. All right. Getting logged in here. If you're out there typing a wire, yes. If you can hear my voice, see the screen, looking good. Strider in the house. Opening overnight. Yes, it is. Daniel. Thanks. Thumbs up, Juan. Hello. Chris, good morning. Wayne, good morning. David, good morning. Gary, what's happening? All right. Nice to see everybody. Here we go. Let's get into the trades. Hey, everybody. Pre-market for the SPY was up this morning. Now it's down a little bit flatter, 40 cents to the downside. DIA slightly down as well, 40 cents to the downside. The Qs about 20 cents to the downside. The volatility index still smashed off of those invasion highs, 37.91 all the way back down to 21.94. I might be in the business of losing the SVXY this week. We're trading at 54.73 with the close on Friday, trading at 54.48. My call goes out to 55 bucks for the 22nd of this month. So I still have a few more weeks on this one if we get another rally. But I'm going to be interested to see, if I can roll this up if the stock market continues to run. We'll talk about, a bit of a case for why the stock market can continue to go higher. We'll talk about a case why it can go lower. We know that it's kind of a toss-up. We're taking everything day by day, week by week, and we have some really good setups this week. I want to take a look also at the Nikkei 225. I'm sure anyone out there in Forex has been wondering what is happening with the Japanese yen. Well, the Japanese yen has been on a mission to get super weak, and the Nikkei has been super strong. Now, I also think from a technical side, the Nikkei is coming back into some major resistance in one of these two spots, and I think the Japanese yen has kind of led the way. So if the Nikkei gets faded at all over the next, especially this week as we have end of month, end of quarter, if the Nikkei gets faded back down, I could see some hefty profit takings on these fifth wave moves on Japanese yen crosses. And I just posted this morning in the Telegram channel for Flex that, look, despite the pain that everyone's feeling, like, oh my gosh, I'm getting my butt kicked on the yen. Look, I'm in some drawdowns too, but I kept the trade size small. I did get filled around 124. I looked left on the chart. I had this trade sitting out months in advance. I looked left way over here, and I sold the Japanese yen around 125. So I did take a sell trade this morning at 125. That is currently in profit. That's one of the positions that's in profit. I'm not closing it out yet. But my target is still this FOMC breakout, which is around 116 and change. We also have a daily reversion target around 114. That's continuing to climb and go with this, dramatic peak to the upside as we've had like 13 or 14 bullish candles, a really huge sequence that is completely undeniably overbought, okay? But it's still a Japanese yen, and it can still be irrational. And this might be the time we're starting to put in tops. We've got 3 weekly pivots, which I love that alignment, and I'm actively selling, but trade size is still small. I'm not going heavy on this. I'm still going to dollar cost average in, and Flex traders will be talking a lot about that this week. So I am still actively pursuing some short positions on dollar yen, Swiss yen, Aussie yen. CAD yen, I'm not in, but I'm looking to get in because I think it makes sense for the alignment. Euro yen, I'm not in. Pound yen, I am a small position at the top. So I have some JPY exposure. We've had a pretty wild open as was it Daniel that said that? No, Strider said that. Okay. So here's what the currency strength chart looks like. We had a wild open indeed. London session starts around 2 a.m., 3 a.m. Eastern time. And wow, Japanese yen just a bullet to the downside, but has since come back to rebalance. Now, how this proceeds for the rest of the day, we will find out. If this comes all the way back up to these baseline levels, this does certainly look to be the alignment where we're starting to see some tops forming on some of these JPY crosses. So pretty interested in seeing how the week plays out, knowing that Thursday is the end of the month, okay? Thursday, end of the month, Thursday, end of quarter, and Friday is a non-farm payroll kickoff. We've got some news this week to digest. Let's take a look at that really quickly. So let's go to this week, see what we have from high impact. Let's go to this week's trading. Fairly quiet, but we do have a precursor on Wednesday for ADP non-farm. We have final GDP for the U.S. We have oil inventories, JOLTS job openings. probably going to print pretty high once again with, looking for full employment in the U.S. CAD GDP, the core PCE price index for the U.S. It's high impact news. Non-farm payroll only for the dollar this week, not for the CAD and the dollar. So we have non-farm payroll expected to be 485 this week with average earnings at 0.4, unemployment rate 3.7. So that'll kick off April. The Fed will not really have its meeting, rate decision, press conference until May. We've been tracking this Fed tool really closely. So here you go. Let's refresh this and make sure that this is current. The market is looking for a 50 basis points rate hike in May. You should see that reflected right here. Okay, so May 4th, 71%. This is, market analysts, the CME group, probability of a 50 basis points hike, because currently the Fed official cash rate, the borrowing rate, is 0.25%. So we just came off a zero for the first time since 2020. And this is the first rate hike that we've had since late 2018. So anyway, the market is anticipating, and even though the market is anticipating the Fed's going to raise rates, we've still seen a bullish trend in the stock market and overall recovery since FOMC a couple weeks ago. So it looks like the market is getting ready for those more aggressive hikes coming sooner than later. So this is the Fed kind of tackling inflation, taming inflation, 50 basis points maybe in May, possibly again in June, and then they can decide whether they want to slow it down and only do, 25 basis points. But the market's fine, digesting like 6 potential rate hikes this year, or 6 more, I should say. So we might have 6 to 7 rate hikes total for the year. We will see where inflation goes. Here's a website that I've been tracking and watching if you're interested. I'm actually watching mostly G20s. This is just a website that's tracking the GDP prints, or that's the GDP, the CPI prints and the inflation prints. So if interested, I think I shared this last week. But here is global inflation, G20 countries. There you go. Okay. And I'll catch up on some alignments. Nice to see everybody. Yep, Nimmer is right. JPYs went crazy. They sure did. And that is why I trade small, because I had chart alarms going off and I didn't, panic and run to my computer and say, what do I do? It's like, yeah, I wasn't happy seeing some of these positions go, but let's take a look. Okay, dollar yen. Dollar yen. So just based on a bar count, all right, here, I'll show you my chart. Here's my MetaTrader 4. Let me go to my dollar yen. Don't mind the mess on my charts. I have so much stuff on here and I've had it for years, I really don't see it, but I know you do because it's ugly. Anyway, I have 309 bars. I have a really high probability of this coming back into these moving averages, and I'm looking at these breakout points where I have these green these green horizontal levels. So right here, I would expect price to be able to find these areas once this top gets put in. Now, I say once the top gets put in because this could be, pushing higher. But if you look left on this chart, you're going to see on the weekly time frame or the monthly time frame, what else is there? We have resistance that goes all the way back to 2005, 2013 and 14. And if that's not resistance, I don't know what is. Look, it's a Japanese yen pair. Could this thing be just straight up bullish and stupid bullish all the way up to these crazy historical highs? Sure. But that would essentially mean that everything that I know for the last 15 years of trading Forex is completely broken from a technical side. Okay, I know that 2012 we had quantitative easing, and it was the change in the JPYs forever being like the dovish bank, right? But coming back to this level, with the way things are at now, with every central bank sitting near zero and starting to come off of zero, I still looked at the technicals. I told traders this year that if we get a breakout above this rising wedge, this thing's probably going from 116.50 to 120. It did, and then some. We've had highs all the way up to 125. I picked up that sell trade, like I said, right here. That was 124. That was higher than that. 124 is where I sold it. I'm going to be monitoring this level pretty closely because my target is still coming back down to these areas and this little ribbon of exponential moving averages. So what I'm looking for, and this is kind of unanimous across the board on all JPY pairs, is let's have a little discussion on wave cycles. We talked a lot about this last week in Flex, but I'll just repeat it. Okay, very basic. Fifth wave move. We've seen a lot of these. 1, 2, 3, 4, 5. This is the cycle that we are at right now in the Japanese yen. A lot of our Japanese yen pairs, almost the entire basket, is this. It's the fifth wave. Now, I don't know where the fifth wave stops. I don't know when it stops. Okay, timing this week makes sense. We have end of month, end of quarter. Nice time to put in some profit taking. Nice time to put in some tops, perhaps. And what we look for is, and this is one of my favorite trades in Forex, if you are not able to trade this trend, or now you're looking at the JPYs thinking like, well, do I buy this? No, I mean, don't chase these highs. I've said for the last 2 weeks, if you want to be long on the Japanese yen, like long dollar yen, long Aussie yen, you got to be scalping on smaller time frames. They've provided profits, okay? But now that this fifth wave looks like it is in and it is nearly done, at some point we form a top. What I'm looking for is the next stage. Once we have this fifth wave completion, we're looking for an A, B, C correction. Now that can come back into this past high, that can come back in to revisit the fourth wave low. In that window is where if I am short on anything that is Japanese yen, so dollar yen short, Aussie yen short, Swiss yen short, I'm looking at all those windows for profit. Okay, so anything that I'm shorting on Swiss or Japanese yen pairs, this is my profit window. Previous highs and fourth wave lows, that's where I need to make sure that I'm protecting my profit. Okay, my worst position right now as far as where my break even is Aussie yen. My Aussie yen, my break even is right here at past resistance. So I either find a way to add a little bit more to my Aussie yen if I can, or that becomes a trade where I just get out of this thing at break even, and then I have profits lined up on Swiss yen, dollar yen, pound yen, other ones. And that's fine. But we'll talk about that more this week in Flex. Okay, break even number 121.03. Okay, my break even is a little bit higher than that, which again, 121.03 is not terrible at all. My break even is 121.881. And I'm looking for, 118.40, 116.28, 116.50. Love those spots without even having to come back to the daily 200 EMA. And and I'm not done. Like, I'm going to be watching for the next 24 to 48 hours. I'm going to look to see, is this a blast off type move? Let me change the color back to yellow so it's a little bit more visible. So we blast off here. Do we we have a little correction today? Do we come back up and we retest the highs, put more of a rounding top in, and then start working our way back down? I mean, again, I'm looking for A. This would be an A right here. Okay. B correction and C follow through. So it's a three-wave move. 1, 2, 3. I look for that. And I'm lining this up. We've got good bar counts on the 1 hour, 4 hour daily chart. Really nice. That's it. I mean, it's just following the technicals. The Japanese yen is slippery. I'm not going to lie. I've had some great trades and profits on JPYs, but traders that have been with me for the last 4 or 5 years in my trading rooms know that I'm always a little skeptical of the Japanese yen. And I tend to trade it fairly small because, especially if I'm counter trend trading or fading some of these moves, I know that they can get out of hand and I know that they can get irrational. And we just had a 115 to 124, 125 breakout, nearly 800 pips without really having any pullback. And that gets traders in trouble. So trade size is super important, right? But I also think this is one of the points where, because of what happened overnight, this to me feels like a lot of pain for the retail trader. Okay, not necessarily us because we should know better, but I'm talking about the general retail trader that's over leveraged, overextended, and that's the type of move that they can't survive the yen going against them that much further. And so we might be triggering some major stop losses, hitting those historical levels or those significant multi-year highs. I mean, we're talking about 15 years ago resistance, 9 years ago resistance. Like those levels matter. Technically speaking, on weekly and monthly charts, those levels matter, and we typically see price react off of those. And yes, Nimmer said it right there as well. And in addition to, I think I said it earlier, but in addition to our bar count, our fifth wave move, we also have a really nice pivot alignment this week, just on the weekly chart. We have 3 weekly pivots in a row. Now, I like it. Doesn't mean it's a guarantee, but I think the probability is this will, one sec. Excuse me. I think that this will end up, again, containing the highs, whether it's the same high right here that's already been established or we go up a little bit higher. I still like the alignment to come back down and find this week's pivot. This week's pivot is around 121. If it goes lower than that, to find the second weekly pivot, that's around 118 and change. The third one is that initial FOMC breakout at 116 and change. So, look no further than possibly this trendline support. Trendline support, trendline support. Price got a little bit overstretched and further away. If this starts to work its way back to the trend line, nice spot to take some profit if you are break even or better. If that is wave, if that is wave one and this is our A, B, C, I could see that happening, over the next couple of weeks. So again, we'll talk more about it. You know my positions. I'm currently short. I said this morning in my Telegram channel for Flex, despite the pain of the JPY pairs, we can't deny the quality of technicals of the JPY this week. Dollar, yen, bar count, 3 weekly pivots at multi-year highs. So again, I'm not calling the top, but I think we are very, very close to it based on what we see from the charts. Okay. All right. We'll come back to Forex in a second. I wanted to highlight a couple of things. So last week, we saw some pretty nice runs. Tilray, a spec stock that we were in, or SPAC stock rather, we were in, that got some love last week, jumped up like 20, 30%. I'm looking to try to lose this week at $9.50. I'm going to put a note here. I sold a 4-1 expiration 950 call. That was for 75 cents. So even if I don't get out of the stock, I'm still going to drill my cost down a little bit and take some profit on that covered call. Stocks that I did lose last week for profit, Campbell's. I lost it at $43 on several accounts, actually. So I turned a few $1,000s on Campbell's. Plus, we have some credit spreads in on this one. And then Under Armour. I lost this one at $15.50 last week for some profit. So I ended up closing out some nice trades last week for some wins. We have some great trades running on CTRA. To the upside, we've got some fresh highs, and we have a $28 call, if I'm not mistaken. I'm going to take a look at that right here. CTRA, we should have a covered call on this one. Out to the 14th. So yes, we could, and again, we could roll that up a little bit if price is at 30 bucks or so. We're rolled up to $28.50, $29. We will see if we can get a little bit of extra love on that roll to make some more money. But we own CTRA at like, I don't know, $22 or something pretty inexpensive. So CTRA, I'll just find a break even. SLB, CTRA have been great stocks for us. We've flipped them a couple of times. CTRA. So our break even's $22, and it's trading with. We would let go of the stock at 28. We can potentially roll that for another 50 cents to $1. So net profit for anything we hold hopefully is going to be $6-7 a share, and we'll keep doing it. We'll keep doing it. We'll keep doing it. We also have some crazy great runs on some of these steel stocks. United States Steel continues to just burn hot, which I love. We are long. I am long uncovered. I'm trying to stay long and bullish on this all the way up into the mid 40s, possibly higher. CLF is another one. Currently trading at 32.62 pre-market. Again, running really hot. It's crazy overbought. I hope we have dips and pullbacks because I'm going to buy dips and pullbacks on both of them. But anybody that's been with me on these steel stocks, these energy plays, commodity plays, we have been crushing it. And it's been a great Q1 for that reason. Let's see here. BOJ announced for the first time they plan to conduct consecutive a limited bond buying operation. Oh, fudge and A. Okay. Now, I didn't see that, Denise, and that obviously explains a lot for what happened overnight. Okay. And again, rather than like completely revamping my entire, thesis on Japanese yen pairs and the technicals, is that anticipated by the market already? I don't know. I mean, look, we'll find out this week, right? I mean, I'm going to look no further than the dollar yen. If we have 3 weekly pivots plus a bar count, blah, blah, everything, right? It makes sense that we could still form a top on the technical side. But here's what I will say. If we come anywhere in the vicinity of break even or better, and you're upside down in some of these JPY pairs, at this point, to avoid getting stuck in some crazy landslide move where the JPY is going to be the weakest currency for the entire year, I don't know, how about we mitigate some of the risk? So again, we'll have to decide and discuss and, spend some time on that this week in Flex. But I still think we have a great alignment. If we come back to this week's pivot, which is 3 in a row, that's 121. That's at least break even or better for me. Maybe I can take some profit on dollar yen and wash my Aussie yen, right? I mean, maybe I don't make any money on the Japanese yen, but I don't lose any money. And at this point, like, I don't want to be stuck in the wrong side of things. And I'd honestly rather be out of the JPYs altogether and not planning on some big stupid move. But history tends to show, and the Forex market, the technicals tend to show that, there's probably something brewing where that type of announcement was possibly even being priced in as this was happening over the last few weeks during, and this has happened before. We have seen this like tandem pricing of like FOMC having this massive announcement, and the JPY just kind of sneaks in there. The Bank of Japan sneaks in with something that is like right along the same lines of like, oh, well, this is what the Fed's doing. This is what the BOJ is going to do. And we tend to see these big, like, macro type moves on the JPY pairs. Okay. So same thing on Swiss yen. I mean, I shorted the Swiss yen. I have positions up here near the highs at 134, 135, 136. I'm watching. I mean, this thing has come unhinged, especially after having all this lovely, like, daily, weekly rising wedge structure. And we're just kind of in no man's land. But, I can't look at a chart like this and think that this is normal, right? Like, to me, if I look at the technicals, I look at my indicators, we don't see this happen very often, okay? Where we're essentially just hammered here at the top. I'm looking for divergence this week for sure. End of month, end of quarter, I'm absolutely looking for divergence. And I want to see, okay, so we have 1, 2, 3 weekly pivots in a row. Well, that's great. If we come back to one of them, where's my overall P&L? Let's find out. I probably won't be break even or better on Swiss yen, but I will find out. My Swiss yen is, see where it's at. Swiss yen is right here. So my Swiss yen break even is 124. It's way lower than I want it to be, but I also haven't been trading super aggressively. I've been scaling in, as I need to be. I have my 134, 135, 136 potential entries. And if I need to use them, that will bump up my break even a little bit. But maybe the smart thing for me to do is if this does come back, indeed finding a 130 or a pocket here around 126, 127, it might be in my best interest just to take a loss. Instead of being down $1,200, maybe I can wash this down to like $200 in the hole and I'll take a loss. I can make $200 back. If profit well, I should say if the position helps me mitigate some of this risk, this is going to be one of those mature trader decisions you got to make. I'd like to say I've got the stones to sit here and just hold it forever, but I'm not going to fight the Bank of Japan. If we have a chance to get out of some of these great technical alignments, I might just be willing to take some losses. And that sucks, but I'd rather get out of this thing than be upside down and have this be the reason, like, oh my gosh, the JPYs are just absolutely crushing me. So again, we'll talk about it a lot this week in Flex. But the drama, the saga continues, right? All right. Let's go back to the charts. In another note, and probably maybe a little bit more exciting and maybe a little bit more optimistic, I'd say if anyone's watching crypto, you're really happy right now. Okay, crypto market cap has jumped a ton. This is now trading at 2.10 trillion. So we have jumped up around 27% in the last 3 weeks in crypto. Total crypto market cap, 2.1 trillion. That's a big jump considering that I wasn't sure what the heck crypto was going to do. I wasn't sure if Bitcoin was ever going to break these highs, and they finally did. Now, having said that, I'm still not 100% sure what type of pattern we are getting here. Okay, we've looked at this a couple different ways. I thought we had a potential channel like this, and this is running up to resistance, and this ends up coming back down. Now, we'll find out if that's the case this week, right? What I'd love to see, and I'm sure everyone else is excited to see some bullishness in cryptos finally, would love to see this just keep going up. And if it keeps going up, then obviously that structure is, invalidated. And I think we have one of the bullish patterns, which is the crown pattern. We have this crown pattern right here, which is a deep right tip. So we're looking for symmetry. We get another pullback, and we have another channel like so that still aims us to bullishness, and we'll start targeting these highs around 68 to 70K. Okay. The other one that still points bullish as well would be if we had a double bottom. If this is a double bottom, okay, so we have low right here, and this is a center high, and we measure that move, and I've already projected the double bottom target up here in green. Okay. So what I'm going to look for this week on Bitcoin is if we are not going to stop going up and we get above 48, 49,000, let's say we crack 50,000. We crack 50,000 plus and we come back and find these pivot clusters. I think we have breakout, retest around 47 to 46K, and we look to see if this will continue to go higher. And I think, the whole world of crypto enthusiasts would be certainly cheering on Bitcoin going back up to 68, 70,000, right? But I'm still bullish overall, cautiously bullish, but it's been a nice, exciting run to see 27, 28% added to total crypto market cap. It's been exciting over the last, 2 to 3 weeks to see Bitcoin up probably 30, 40%. So that is 26% up as well. I mean, it's interesting, like that total market cap to actually Bitcoin's price is pretty similar. There's some stocks we've been talking about. I'm currently in on some of my stock accounts, GBTC. GBTC is trading at 32.05. We also had a nice big recovery in Coinbase, which I'll be watching this week because I have a 210 covered call. Coinbase is trading at 194. I have a 41210 call. My break even is 199. If I walked away with $11 a share, I would not be upset. I want to hold Coinbase longer. I really do, but if I can flip this and turn it for a $10,000 profit, I will do that. Anyway, so I'm watching. I mean, chart alarms are set. I'm curious to see if I can repair my Coinbase and just continue to hold. I've got a new watermark high in my crypto portfolio, which I'm happy with. So I think if we have a good run on Litecoin, on Ripple, I can't really trade right now as a U.S. trader. Let's see here, what else? Ethereum. I'm gonna hold Ethereum, hold Bitcoin, Litecoin, Solana, Cardano, all those other coins. Like I'm probably looking at some profit taking. Solana's got a nice little run off these lows around 81. I was targeting this pivot cluster way up here at 186. We're starting to break this falling wedge. So if we break, retest, go, look for some type of three-wave move. You've got pivots and pockets galore back here around 160 to 170. So, I mean, things are looking better for sure. These falling wedge breakouts, these bullish pushes. What else? Cardano is ADA USD. Cardano, same thing, right side of the trend line, getting some permission by the bulls. We can run back up here and retest highs. We've got a yearly pivot also this unchecked 1.80. So 1.23, 1.80. I like this trajectory. This is Cardano, ADA USD. So if we break, retest, go, let's get it. Pivot cluster right in there. Yearly and monthly, you know? So I would love to see just something where we can connect the dots, get a trend line running, and then see if we get some bullish recoveries and overall bullishness in the stock or the crypto market. So it's one of those things where I'm obviously excited to see it. Being patient and adding at some low levels. I've got a nice new watermark high in my crypto portfolio. I want to see where I can take it. If I turn some nice profits on Cardano, turn some nice profits on Solana, turn some nice profits on whatever, I'll probably convert that into Bitcoin or Ethereum. Probably Bitcoin, honestly. Okay, so good stuff. Dana says, "Are you on any longs?" Yes, on some on one of my accounts I'm long. But that is also like those are done. I started closing out longs last week, so I don't have anything left. I think the only one that I was long on was New Zealand yen. That I still have running New Zealand yen, and I'm probably going to take profit on it. But what we've talked about in Flex and what I have in my larger accounts are I'm short JPY. Well, I should say I'm short the JPY crosses. So I want to see these corrections. I want to see these fifth wave moves. We're getting crazy overbought conditions with bar counts and pivots. So I'm just going to stick to the technicals this week. I will say this, like I don't love the idea of these pivots not hitting. If we don't hit the third weekly pivot this week, it's going to make me maybe wait another week or so, but we better start to see some reactions and some behavior that makes some sense in these JPY pairs, because otherwise we're looking at some broken technicals. And a lot of times when that happens, the market finds a way to rebalance and still make sense, even though it's been a wild couple of weeks in the JPYs post FOMC. Okay. All right. Good stuff. Yep. So it seems like everyone we're on the same page, right? It's like, look, don't let the Japanese yen be a reason that it's going to like crush your forex trading. If we have some cooperative moves this week towards those weekly pivots, I will be assessing the total damage. Look, we can always make profits back, but if it comes to let's I mean, like dollar yen is one of my best positions as far as my break even. It's one of my highest ones. So if that comes back and I can make a few $100s, I'll wash away some of the other ones and see where I'm at. Maybe across the board, maybe I lose, 1%. Okay. To me, that's a more responsible move than, projecting like, oh, I could make like 5% on my JPY crosses if they do the total opposite of what they've done the last 3 weeks. And maybe they do. Maybe in hindsight, I'm totally wrong for bailing on them early. But in my experience, I've also had, I probably made a lot more money by not getting hurt on the Japanese yen than trying to make a ton of money on them. So, anywho, that's it. We'll talk more about that this week in Flex. Okay. All right. Any currencies you want me to take a look at? I mean, really, the big story today was Japanese yen. We'll see where it goes. We got dollar strength. I'm hoping we can see a little bit more separation out of the euro and the Swiss this week. That's another one that I'm kind of actively watching. One thing that would be interesting over the next couple of weeks to look for and see on the euro Swiss especially would be if we see any type of news, and this might take some fundamental support, but it might take some news out of Russia, Ukraine, the conflict. We might have to have some type of truce, some type of ceasefire. That is what's been really given and granting the kind of extra resiliency of the Swiss franc versus the euro. And I think if the market has, I think the market is obviously post FOMC, the market is willing to digest the fact that the Fed's going to raise rates 6 times, 7 times perhaps this year. The market's also digesting that other central banks are coming off of zero and starting to raise rates this year. The market's also, accepting that there's tons of high inflation around the world. But the market is also desperately looking for yield because most central banks are way behind the yield curve. They're way behind, coming off of zero. They've waited so long that now it's like their backs against the wall. Inflation is crazy high. They have to raise rates. Yes, they're risking, contractions for economies and, there's still supply chain issues and all this other crap. But they have to do something because I think what is clearly aggravating for investors and aggravating for returns and aggravating for fixed income and consumers is you can't have what is typically 2 to 3% inflation and now have 7, 8, 9, 10% inflation. That is painfully obvious. And so I think the central banks are taking that approach this year where they're coming off of zero. They know they can't keep throwing COVID stimulus at the markets. So they're scaling back, they're tightening, they're raising rates, and it's all in an effort to curb these numbers. So if these numbers start to come down, I'm not saying that they drop dramatically, but I'm saying that they plateau and maybe start to top out, maybe start to decrease a little bit. That shows that at least the dial of raising rates is helping, and we see if it gets fixed. But on the other side, with Russia, Ukraine, and geopolitical concerns, if there's a truce, if there's a ceasefire, the reality is a ceasefire doesn't have to be the end of the conflict. A ceasefire can just be for the next 6 to 12 months, nothing happens. There's still, border concerns and there's still geopolitical tension, but a ceasefire would at least probably put the market at ease. And I really think that there is a case here. We go back to our SPY, some of these major indices. There's a case where this market can just keep plugging away and trying to get back to these highs. Okay, I mean, we started off in a pretty dramatic hole. We saw anywhere between 10 to 15% sell-offs across a major indices in the U.S. Literally starting out this year, we're at the all-time highs. So we dug ourselves a hole. If the market's trying to dig its way out of it, I mean, this recent rally, we just took out previous highs. We're challenging previous highs. And I've said in equities on demand, this is either a level where we have a crown pattern, and this is where the right tip is going to form, and this thing starts to get faded back down with more concern, or this is the dip where you have to look at it as an opportunity, and the market's going to do everything it can just to get back to the highs. And some people look at this and say that makes no sense, that'll never happen. It probably would, because if the market's going to establish a range, guess what? Investors can buy low and sell high. Investors can buy low, they can sell high. Sector rotation, you can fix your portfolio. If you have a broad recovery to the upside, you should be in good shape. Guess what this is? This is you cleansing all of your crappy positions because you have a chance to get out of them. And then try to find something that's high quality and get back into stuff that's a little bit more resilient, a little bit more less vulnerable and susceptible to all these crazy peaks and valleys that we're seeing, all these uncertainty and geopolitical tensions. So again, there's a lot of shapes that the market can take this year, but I still think in the background, the fact of the matter is this market with all the money that's out there is trying to go somewhere. You can't go into bonds. You can't go anything that's really fixed income. I mean, like fixed income is desperate to make yield. And right now the 10-year yield is paying over 2%. Okay, 2.45%. I put this on here months and months and months ago. Is 2.25, 2.5% is at the end of the bull market. Maybe, right? I mean, it doesn't mean that we have to have a recession, just means that we could be plateauing. So, we'll find out. So, obviously a lot of stuff to juggle, but just like everything else, risk management, trade size, trade right now, right? Like I'm trading for today. I'd like to say that I'm Wayne Gretzky and I'm trading where the puck's going to be, but right now I know that if I've got some trouble in my portfolio, it's my job to mitigate that. If I've got some profits in my portfolio, it's my job to nurture that and let it run. I mean, I want to ride my best positions because I think that's what ends up paying for and hopefully surpassing any trouble that I get into. So, I mean, right now, like Forex has been great. I'm up like 4 or 5% for the year in my Forex portfolio, but yeah, I'm in a drawdown on JPY pairs. So I do not want that to get out of control. Stocks and options wise, this year's been great. Crypto wise, it's now starting to show some life and it's great. Like everything's fine, but I also don't want to get into any further trouble if I don't have to be. So a lot of that's going on. So overall assets you trade, whether you're trading forex, whether you're trading stocks, trading options, trading cryptos, whatever. There's always risk reward. So I'd say do your best to ride those winners and really have that difficult conversation of maybe taking some losses. I mean, I'll tell you, if you're still here trading 6 months from now, you're in probably better shape than a lot of traders that look at this and they're like, I'm just going to hold it. I'm going to double down. I'm going to double down. It's like traders do that stuff and that's where they get burned really badly. I've seen it. I've seen traders get absolutely smoked on a move like this where it's like margin call, right? It's not worth it. I mean, I would rather trade small and, sacrifice the potential big wins to just stay in the game and know that I can figure out how to survive each and every month, each and every year. That's why I'm still here, you know? But that's a process. Let's see here. Shiba Inu, huh? MARA crossing. That's a crypto play. MARA. We were in this one not too long ago. We bought this thing in the low 20s and flipped it for a nice little. Actually, I don't think we didn't even take assignment of this one. We had a great trade. We took some profit of the long put on credit spread, flipped it around, took some ownership, $5-6 a share. Now it's up like $10 a share. That's pretty sweet. Coinbase, like I said, I'll watch that this week to see if we can get up to 200 plus. I'd love it. My break even is 199. Anything 205, 210 going into this week, I'd be pretty happy. Shiba, let me see here. I haven't looked at these meme ones, but Shiba is up a little bit. Doge. Somebody asked me, what would I do? What about the meme ones? Like, I'm honestly not that interested in trading them. Like AMC, GM, GME, BBBY, all the stocks last year that got squeezed. I'm not that interested in chasing, short interest floats and like Wall Street bet stocks. I'm not interested in trading those. I'm interested in quality sector rotation, follow the money, energy, financials, materials, commodities. Like that's where I'm putting my money this year. And then in currencies, it really is like kind of a full-on currency battle. The dollar really hasn't moved a lot. The JPY has been like the big, I mean, really the big loser since FOMC. But I didn't see that the bond buying news over the weekend. So, Doge is breaking out of here, this little falling wedge. I think there's some upside potential. Do I love it? Not necessarily, but we've got a yearly pivot, and I think Doge could benefit from a broader crypto rally in general. So that would be that's 130% to get from current price to that yearly pivot. I mean, that'd be pretty exciting for some Doge hodlers out there. Okay. So anyway, all good. All right, traders, let's do this. I'll spend a few more minutes if you want. If you have any requests, throw it out there. Just a couple. We've taken a look at generally everything. I'm curious this week. I mean, we still have to watch oil, gold, silver. Oil's back down to 105.87. We've seen some volatility. I did take some profit, by the way, on CAD Swiss. So flex traders, make a note of that. I took some profit up at the highs around 74.90 this morning on my phone. So I did get out. I'm looking to get right back in. I've got some CAD Swiss positions. I'm buying dips, buying dips, buying dips. But this was a nice trade right back up to our 7,500 resistance. So I did want to take some profit. Okay, that's a good thing. So let me make sure that closed out. Let me get in my app here. CAD Swiss. I closed it out on my phone this morning. I'm just going to make sure that if I'm getting filled on retracements, that is totally fine. Okay, there we go. So I'm going to close out CAD Swiss. There we go. Closing out there. Euro Swiss in profit, dollar Swiss in profit. Looking good, looking good. Okay, perfect. All right, so close out some positions on the CAD Swiss, and that should pop in here in Telegram in just a second. So again, CAD Swiss I still like. I mean, we're up at these highs. If there's any dips, I'm still interested in buying dips if we get them. I'll buy it all the way back down to these lows again and just continue to trade this range. If this is range low and support, and we trade it up here to resistance, I will buy dips and hold it. So I still like the trade. Pound New Zealand. All right, Charles, let me take a look at Pound New Zealand for you. Pound New Zealand. So on a technical side, we have some fantastic oversold conditions with divergence on a daily time frame. To me, over the next week or two, this looks like a trend line break that we can start coming back into these pockets. Okay, again, Q1. Think about this. We end the month, we end the quarter. Q1 could be this amazing head start for commodities. This amazing like jumping out of the gates commodities. We could see a little bit of a shift, a rebalance. There could be some heavy profit taking going into Q1. Pound New Zealand's a currency that reflects that. We've seen commodity-based New Zealand's, really get an upper hand here against the pound. Now, from the technical side, I have talked about this in Flex. I mean, I would love to buy the pound New Zealand from this level to this level, which is around 86 to 83. We have it noted on our charts in Smart Trader. We've talked about levels. We put in a pending buy around 83.50. Now, right now, 89.07, I think we can still look at this trade this week as a potential breakout. Okay. Now, if you follow my newsletter, the Pulver Report, we took a buy trade right in here at the low. And if this gets back up into this area, coming back to the highs, coming back to this pivot cluster, coming back to this pocket, I think from around 90.50 back to around 9,300, that's a nice profit potential here for the next couple of weeks. So if we start to turn the corner, and I'm not in the trade yet, right? I mean, I'm taking a small position right here, but if we get a confirmation break of this trend line, I would be looking to see if we can start gravitating back up towards these corrections. We've got a lot of nice pivot alignments on some of these currencies right now, but confirmation will be key to get in. Otherwise, like I said, if this thing breaks lower and falls, it's on the left-hand side of the trend line, you got to stay with the trends right now. And I will buy this thing lower around 83, and then I'll take it up for that correction. There's past support. I'll take it up to 91, but I've got to wait. But if we have confirmation on the right-hand side of the trend line, I like this trade. I think there's some really nice alignments just on oversold conditions with divergence on a higher time frame. I think that ends up putting in some lows and breaking the trend line. So that's what I'm going to look for. Pound US dollar. Okay. Pound US dollar. This one is still in a large channel. I'm really not super interested in this trade other than I have a robot that runs on this one. And it's essentially, buying channel lows, selling channel highs, and looking to go back and forth. Okay. I do think that in the bigger picture, we've fallen off these highs around 42. It came all the way down to 1.30. We've had a 1200 pip correction from top to bottom. I think that, in due time, we have this yearly pivot right in here on the pound. I think that if we build a base off of this 1.28, 1.29 low, I could see this going back up to channel highs. I could also see some bullish pattern emerging where this ends up making a move back up to the highs around 4,200. So if I'm looking at a bigger position, I think that the pound dollar, let's say the next 3 months, if I can verify some bullish patterns down here, I'd like to be buying this thing at 129, 1.28, and try to take this back up to 140, 141. But I want to see the evidence that we're buying this thing extremely low at channel support with maybe even some oversold conditions, and that's kind of my bigger position. Otherwise, it's literally you're buying the channel lows, you're protecting profits here at channel highs, and repeat until this thing finally breaks the structure and gives you some open space. Speaking of open space, one trade we're going to look at this week in Flex is Aussie New Zealand. We're trading at 108.50. Okay. So this is that discussion where I said, look, if we get above 108, 108.50, I'm very interested in looking to see how this candle closes for the week. Because if we stay above 108.50, I think this is finally, after many years in the making, this low to high, this is the higher low to higher high. Low to high, higher low to higher high. Now, I know that we were long, so Flex traders, we were long here, all the way down from 105, 104, 103, took it all the way back to 108. Great trade. But now if we are getting a fresh breakout here, I'm looking to go long with, and again, I'm not putting stop losses down here. I'm talking about if I'm right, let's trade this thing with some pretty tight stops around 107, 106.50. And if we're right, we take this up to 112, 113. So we have a positive reward to risk. If this is, and this is why I said I'm not just waiting for today. If it is breaking out here, break, retest, go, look at this with a tighter stop. Follow along with higher highs and higher lows. Take this thing to 112, 113. If I'm wrong and this thing, fakes out here, comes all the way back down to 106, we're probably putting in a top at resistance, and this thing sells back off and stays in the channel. So I'm willing to, increase my trade size if I take any losses here. As an example, if I get long and it reverses, I'm willing to short this with a bigger trade size to make my money back. Okay, but if I'm right and this is open space, we should be going north 200 to 300 pips at least. Okay, so this is going to be a crazy week. Like, we've got some great alignments, we've got some great technicals. I'm very curious to see what happens, the next 24 to 48 hours on these JPY crosses. It was obviously a massive open to kind of flood these things, again, end of month, end of quarter, but I also see a lot of tops and bottoms forming in March and April, you know? And so if we form these tops end of month, end of Q1, I could see those corrections happening from April into May, and maybe we get a lot of these rebalances. We get a lot of the equilibriums. We get a lot of the pivots that get hit, and that's what we're watching. Okay, all right. I'll let you go. I got class here in 15 minutes or so for equities on demand. We've got a lot of stocks to discuss, and we got some 401 expirations to review. So I'm just going to rattle them off here. Airbnb, I might lose a stock this week for profit. I hope I do at 157.50 for a nice profit. Chewy might lose a stock this week as well. Pfizer might lose a stock this week. Uber might lose a stock this week. Coinbase, we'll see. What else? Intel might lose the stock this week at $50 plus. So we could have some nice trades, some profits. No complaints on that, obviously. And Forex will keep plugging away. Cryptos, cheer them on. Everybody can celebrate. Let's get up to these highs. I would like to see Bitcoin. Okay, we're at 47,555. I mean, we're sitting back up at the yearly pivot. Now, what I'd like to see would be this. Okay, I was a little concerned that if you connect these highs, that this comes up here to around 48,000 and then decreases dramatically. If that is the case, then I think we have this channel playing out. And so, as exciting as this run has been, 20% to the upside, this could still be channel bound and choppy. All right. But if we blow through this level, okay, if we blow through this level here, then I'm looking at this as this was resistance becoming support. Any dips, I think we buy dips and we start talking about that double bottom target. I think, the sights are set on, let's see if cryptos can make some new highs for the year. And then you're going at the bigger picture structure, which is this. You zoom out from where we had our previous highs and you connect those dots, it's this structure right here. Connect the highs, connect the lows. And if we're building support in here, that's your bullish target. Go back up to 72,000, And obviously that's going to make a lot of crypto traders happy, a lot of investors happy, and I will start probably converting some cash and profits and transfer them into other coins. But whatever altcoins I get, I'm probably going to start getting more concentrated in my portfolio versus I have like 12 or 13 coins I'm in right now, so I'll probably consolidate it to maybe 4 to 6. But let's see what happens. Okay. All right, everybody. Again, thanks for being here live with me today. We'll be back on Friday to wrap up the week. We're going to have a busy week in the trading rooms for equities on demand and Flex. If you take a minute before you go, click that thumbs up button for me. Help the algorithm for, having 80 people watch. If we've got 60, 70, 80 likes, that'd be amazing. Obviously, that'd make the YouTube algorithm take a note. And then from there, spread the word. Get more people in this channel. Say hi. I'm here to help. And all good. All right, everybody. Thanks a lot. Good to see you. See you this week in the trading rooms. See you back here on Friday for the poll report. Adios. Bye.